Good morning, good morning. Hey, Cisco, how you doing? Aloha. What's up in here? How are you? Ian, how's it going? Jeez, we're within spitting distance from all-time highs. Marcus, how you doing? Good morning, everyone. Welcome to tradingsyndicate.org. I'm JJ. This is where we work to get retail traders profitable. Well, the cool thing about market profile are these profile shapes. And yesterday we had what we call a P formation. Okay. So the profile looks like the letter P. Okay. Why is that significant? Well, the base of the P is where the shorts are trapped. Hey, Moran. So that's where the shorts are trapped. That's where the overnight low is, right? Are you guys seeing? You're seeing this over and over again, right? Especially folks in the room. Hey, Raj. You're seeing where the shorts are trapped. So the bid is at the overnight low. We had a liquidation at the end of the day yesterday. Right, so we put in a high yesterday, we liquidated down, then we took that inventory, and now we're selling it above yesterday's high, right? So if you look at short positions, there's trap shorts here, there's trap shorts here, there's trap shorts here, and then the latest set of trap shorts is at 69.90, and then there's your freshest, right? So if you're thinking of like fresh meat, these are like 3-day old shorts, and these are fresh shorts. Why? Because people initiate at different time frames. Okay. And why is that significant? Well, we're going into month end, which is Thursday, and the all-time highs are up here. So we're really close to all-time highs. Um, we saw 7,006. The next level up is 13, 22, and then 70.30 is where we failed to take that out the last time we were up here at the beginning of the month. So the other thing I want to talk about really briefly is a lot of people are wondering why we are at all-time highs again, and that's because we had two flushes. Okay? If we go and we put in the overnight, you'll see that we've had 2 weeks now where 2 Sundays we've had a gap down and then we go fill that gap. And then we had a gap down and then we go fill that gap. We've had two sets of these sort of false gaps, and then nothing happens. After that, a lot of people are short in these areas. So when you gap it and fill the gap, and then gap it and fill the gap, what you do essentially is you trap two big sets of shorts, right? And that's going into month end. I couldn't have planned it better if I was doing a short squeeze myself. It's really, I don't, I don't want to say it's done on purpose, but if it was done on purpose, it was beautifully done, right? Because when you trap a bunch of shorts underneath or in cost basis, right? When you trap a bunch of shorts, it's so easy to push price higher because no one has anything for sale. right? And this is the way, when you're working a deal and you're working a stock, if you need to bring in buying, you will trap shorts and use them, right? You will use them as leverage to help push a market higher. It's done all the time in stocks where the investors or the insiders control the supply, and they need to get the price of the stock higher, right? Hey, Dave. So what we have in the market today is it's just the same thing happens because human beings trap themselves, unfortunately. It's really, you don't have to go and trap shorts because human beings will make bad business decisions over and over again, and they will trap themselves. That's just the way of the world. It's nothing malicious or evil. It's just people will follow price. They'll get trapped at the lows and they don't have a way out. So what they do is they keep adding to the short positions, and the more they short, the higher the market goes, because what is a short seller is a future buyer, right? When you're long, you're a seller. When you're short, you're a buyer. People don't understand that, right? They don't understand that. They don't think about that when they're taking positions. They don't think about that at all, actually. So what that does is it gives people who understand how the market works, it gives them a distinct advantage. And that's what we try and show you at Trading Syndicate. We try and show you how this market works so you can effectively trade it. So how do we trade it tonight? Oh, well, let's go take a look. Let's go take a look. It's quiet. You could tell it's quiet because there's a lot of, I could see YouTube is quiet as hell. There's nobody even on. It's just the folks in the room. Maybe there's some people on, but they're quiet. What do we have for news today? Let's just take a look. Tuesday. Oh, there's no news. Consumer confidence at 10. Tomorrow's Fed day. So the overnight point of control is way up here. It shows all that beautiful distribution. You see how we've got this tight little range, between 7,000 and 7,007. I've got my balance from 87 to 93, and if you're wondering where the hell did JJ get this balance from, I went and I took it from here. If anyone's wondering, I took the balance from here because I couldn't find a balance zone in here because it's just been trend higher. You guys get that? We'll be doing kind of a shortened session today because it's obviously pretty slow. Let's see if London does any kind of a pullback. What I've decided to do is when it's really slow, instead of just boring you guys to death, we'll do like a half an hour, 45 minutes. And then we can always do other sessions later. When it gets a bit busy. Yeah, gold is what, 50.94 on the futures? Nice. How's silver? What did silver hit? High of 113. Yesterday it hit 117. Huh, interesting. Well, that's great. I hope you're long. It's good to see the gold bugs making money after lugging that resource for 50 years. I still remember in the 90s, all the old guys would be like, gold's going to 5,000, gold's going to 5,000. And they'd be going on and on about gold going to 5,000. Everybody would like, yeah, just buy an internet stock, man. It'll go to 5,000 way quicker. These guys held their gold positions. They were buying physical gold, hoarding it, putting it in Swiss banks. So it's good that they're making money. I hope they're still alive. Most of them are all dead, but for the ones who still have their gold positions and they're alive, they might be in wheelchairs, but they're long. They've been long for 4 decades. So it's nice to see them make some money. Oh, man. Oh, boy. Oh, totally. Because I grew up in Vancouver in the market, and the Vancouver Stock Exchange, it's all old hard rock miners, right? Guys who have like old guys, they'll have a gold deal and they'll run that deal for 30 years. And they were all like, "Oh yeah, gold's going to 5,000. It's going to 5,000." It'd be like $1,500. It's going to 5,000. It's going to 5,000. This fiat currency, and ever since we went off the gold standard, they were just, really they were believers, like true believers. So, you know, and they missed out. Like the internet came and went, and they didn't even know. It's like one of my clients, the Penguin. He wanted to do an oil and gas deal when the internet was cranking. I'm like, let's do an internet deal. He's like, no. Oil $17 a barrel. We're gonna put $5 million into the ground in Bakersfield, right? So it's good to see them make money. What are we doing here at ES? We're not doing anything. This thing it's in quiet, desperate distribution. Look at this, eh? Just the only way you can trade this is just buy a position and hold on to it. Right? And here we're at 4 times cost basis, so there's really nothing to do except wait for London and see if we get any kind of a liquidation. Oh. Yeah, so tomorrow is a Fed day. Thursday is month end. Friday's the last trading day of the month. JP Morgan to pay $920 million for manipulating precious metals. Oh, it's like a parking ticket for them. Yeah, $1 billion. That's like a parking ticket for JP Morgan. You seen that new building they built in New York, Harry? You got a couple of points? Nice work, Bradier. Hey, Phil, how you doing? Yeah, it's... Oh, just Google the new JP Morgan building, and you'll see that $920 million is like a parking ticket. It's nothing. Think about how much money they made on the manipulation. And why do they manipulate it? Because it's there. You have a moral obligation to manipulate it. Otherwise, you're not a, you're not in the business. You see, folks, what you guys don't understand, unfortunately, is that this is a business, and it's a cutthroat business. And it's not a genteel business. right? This is not for the faint of heart, this business, right? It's not for kind people, right? This is a very cutthroat, slash and burn kind of business. It's retail is nice because you guys can do whatever you want, you trade when you want, make your money. You don't have to deal with stuff. But when you work in the business, man, people are coming for you all the time. You got to have eyes in the back of your head, right? There's a lot of money at stake. You'll be surprised what people will do from that kind of money. you know, what's up, Mikey? How you doing? Yeah, finance is not a business. It's a battle, man. It's a battle. Why is it so hard to get it right? Because you don't know what you're doing. Straight goods. Straight goods, it's so hard to get it right in retail trading because retail traders don't know what they're doing. They're educated poorly. They have no discipline. They have no risk management, right? They don't stick to one thing. They don't have a business plan. It's hard, man. It's hard to be a retail trader. Retail trading is the hardest job in finance because you have no support system and you have no education, right? So we're getting a little liquidation here. I'll be looking at this level. Well, if you're short, your ultimate target destination is yesterday's high. And these are the railway stops to get there, right? So that's good. Finally, we get some liquidation. Let's go find the bid now, right? We took the J low by one tick. And let's see if the bid comes in. Yeah, Mikey, this business is, I've seen fathers and sons take each other for millions of dollars. I've seen brothers take each other for 5 million bucks. I remember this one guy, he took his brother for $5 million. It's like stuck him with a $5 million loss. Oh yeah. That's why when you're doing this, when you're trading, you always have to have that mentality that you have to conduct yourself very, very carefully in these markets. Don't overtrade, don't FOMO trade, don't do all that stupid crap that people come up with. All these excuses for bad business, revenge trading, FOMO trading, all of that stuff has no place in business. It's never used in a real business. So, if you want to learn how to do this, we'll teach you. The point of entering a trade only at the edges means you get the best deal. Exactly. So, here is the 2 times discount. So, if you're buying it at the cheapest discount, Sageko, you get probability of a move. If you're shorting at the top, that's the best probability for a move down. You see? That way, you take less trades but they count. You have a higher probability of them working when you're at the edge. When you're trading in the middle, the order flow, it's not, you're not at an edge, you're not getting the best deal, right? Once you get good and you get fast, sure, you can trade in the middle. The other thing that retail traders don't know is when not to trade, right? So when the candles are like this, these tiny little candles, don't trade that. That's for people to build a position and sell into strength, right? That's why it's so hard to get it right, because there's no good information on trading. And trading books are really great, but trading books don't help you when you're getting punched in the face, right? That's why book smart and street smart are two different things. And what I teach people how to do is I teach them how to be street smart, so they don't fall for every little scam candle out there, right? You know when to trade, you know when not to trade, you know where you should be selling. Say I was long 7,000. Say I went long 7,000 right now and I put my stop underneath these candles. Well, I know that there's going to be a seller here, right? The top of the candles are where the sellers initiate. I know there's going to be a seller here and here and here. Could be a long night, right? So if I'm long a couple of contracts at 7,000, well, wouldn't it make sense to put an order at 7,001 to see if anyone wants to buy it? And if I can't sell, if I'm long 3 at 7,000 and I can't sell one measly contract at 7,001, it means that somebody is selling ahead of me. You see? If I make that sale at 7,001, I can put my other orders and keep them in here, right? Maybe just a tick underneath there. But that's what real traders do. They buy a position and then they put sell orders out. If those sell orders get executed, great, right? So I'm out at 7,001, right? And if we stay over 7,001, I'd put my next order here at 7,001 quarter, right? So you'd be out 2. My third contract would be 7,001 3/4. Now that's not a lot of meat on the bone, but that's intelligent. Because why are you going to tie up your capital to buy inventory that you can't sell? Do I ever use Fibonacci? No, but I'd love to have it as a last name. I think in my next life I'll be Fibonacci. Just Fibonacci, no first name. You know, like Cher. Hey, I'm Fibonacci. Nice to meet you. No, I've heard good things about Fibonacci. We have one of our brothers, Dr. Fib, who lives in Argentina. He is a Fibonacci guy. He loves the fibs. I don't know how they work. I'm an inventory trader, George, right? I'm 57 years old. I've been doing this for 34 years. So I'm what they call in the old days, I'm what they call an old eye gouger, right? I buy some inventory, I poke you in the eye, and I get you to buy it. You know, I buy some stuff and I get rid of it, and I go buy some stuff again. I'm a very blue collar trader, right? You know, because I was taught by guys who were blue collar traders. I didn't go through the Wall Street, Yale, Harvard, Wharton Business School, Stanford. I didn't go through that spanking machine. I was taught by guys like one of my guys, one of the traders who taught me, his nickname was the Reverend, and he used to dig pools for a living. Like he used to actually dig swimming pools with a shovel. Then he became a trader, and he's a multimillionaire. You know, another one of the guys, you know, he used to own a tow truck business, and then he owned a brokerage firm. So I was taught by blue collar guys. But make no mistake, they made hundreds of millions of dollars. Right? Liberace, Fibonacci, same, right? Um, no. I hear good things about fibs. I don't know how to use them, right? University of Hawaii at Manoa finance heavy hitters, exactly. I did go to UH Manoa, but I was microbiology, Cisco. I didn't take finance when I was at UH. I was in a lab. I worked in a lab at Kuakini Medical Center. It's tried to make my parents happy by trying to getting into med school, which did not work at all. Yeah, and mitochondria has nothing to do with inventory. So, folks, say you had bought, three contracts or five contracts, sell one, sell one, sell one, sell into strength, right? And then you're out of your position, right? And then you're not sweating, right? This is just an example of how you take trades. Hey, Jerry, what's going on? How you doing? What what are they expecting tomorrow for this whole rate mumbo jumbo? Are they going to lower rates? Try and give me an answer without being political. Okay, London's going to open in a minute here. Let's see what London's got. Let's see if London puts the kettle on, Raj. Hey, Redcom, how you doing? How's the DAX this morning, my friend? Or are they just going to keep rates the same? That's what the scuttlebutt is. Okay. Ed, what's up? How you doing? London is kind of directionless here. It's kind of jumping around, doesn't know which way to go. Feels like a Friday to me. It always gets really slow before a Fed day. You should come, but come up to Liverpool. You really need to come to Liverpool, Ed. It is the greatest city in the UK by far. Let's see if Raj is awake. Yes, I'm in Liverpool. I love this place. If I was younger, I'd open up a trading shop brokerage firm and I'd hire nothing but scousers. It'd be a hoot. Oh, you got the flu, Redcom? Okay. That's brutal, man. Take care of yourself. It's going around like wildfire with subtitles. Hey, listen, I could completely understand Scouse. All right, we're hitting 7,003. Man, it's choppy. Nobody wants to play. Usually, London usually tries to go and take that K low and take that stop. No dice this morning. Ugh. So do you see, folks, how when I drew these lines, the market stopped right there, right? So if you don't believe me, just try it yourself. Go and draw lines at the top of the candles after a liquidation, and when they go back, they'll stop right at those lines, right? Unless there's really large buy orders, right? Oh man, you don't have to ask me twice, Cisco, to move back to Hawaii. I'll be there in a second. I mean, I do love Liverpool, but you know, I do miss Hawaii. Yeah, that would be cool to have a trading firm in Hawaii. We'd trade all night and then we'd go have loco moco. This is really boring. Look at this. London's got no juice this morning. So somebody put in the chat a picture of a guy kneeling down. What the fuck does that mean? Yeah, it's just really slow. Good distribution. Point of control's up here at 7,000. Somebody tell me if that what the person in YouTube is that rude or is that I don't know what the hell that means. I don't get the new hieroglyphics. Should I be deleting that? Is it? Oh, okay. All right. I don't know, man. I don't get the newfangled hieroglyphics that these people put in. Oh, is it? I don't know. I deleted it anyway. It can't take the risk of offending people. Is there any truth that the Middle Eastern market open is starting to affect markets more these days? I have no idea, George. No clue. Thanks, Dave. I will. Appreciate that. Okay. Now we got some liquidation. Sellers at 3, 2, 1. Let's see if we can take out 69.99. My goodness. There are, what I forgot to mention, there are some, there's a short position right here, and then there's another short position here in tonight's profile. So any retracement will look, right? It's normal that shorts would be trapped under yesterday's high. They would have been using that as a stop. So that's why we're leveraging them to sell our product. You see, yesterday's inventory is here, right? So we take the market up and we sell as much of that inventory as we can up here before we have a retrace. If we were to open the market here, we would open on a gap. We'd open outside yesterday's range. So Oof. How's Bitcoin this morning? 88,300. Not much going on. Everything's kind of nice and slow going into the Fed. Yeah, pretty much. Hey, Cisco, does anybody have any questions that they need answered? Wait for a nice liquidation, folks, and then maybe we can get some position. I'm not seeing any decent trades here. Are there four, Marcus? Where are the other two? Oh, they're here. Oh, right. Look at that. Check that out. There's a single print here, and there's some here too. You're right. Thank you, sir. So we have four short positions, some pretty subtle ones too. Yikes. Okay. Yeah, let's see what earnings look like. Give it another couple of minutes here. Yeah, all we need is a couple of decent sell orders, Cisco, and those bids will run away. They'll scatter like cockroaches in a New York apartment when you turn on the lights. Oh my goodness. Well, not very productive this morning, my friends. That's the problem with short squeezes. I love orchestrating a short squeeze. I hate trading it because it's just so sticky. Nobody wants to play. You got four obvious short positions, right? We got people trapped short from 2 weeks ago. So the buying is all forced buying, right? Because who wants to put a position together at the all-time high the day before the Fed, right? You'd have to be like clinically insane to want to do that. What's our all-time high at? 70.25 half. Ah, okay. Good question. So this right side is what we call a market profile chart. Basically, see, this is like a half-hour candle chart. That's all it is. So if you took a half-hour candle chart and you gave every candle a letter name, so you have A, B, C, D, E, F, right, and so on. So that way we can reference, here, I'll show you. Now these market profile charts, what they do is they let you open up a candle. You see, like that's a half-hour candle, that's a half-hour candle, that's a half-hour candle. And it's like opening up a candle so you can see exactly what's inside it. You can see the volume at every single price, right? So what that does is it allows you to see where the inventory is priced and where it's distributing, right? You can see the cost basis, right? It also tells you, and you can, if you don't have this, it's okay. You can use a half-hour candle and you can kind of rig it so you can get the same kind of information. So you know where the stops are. The stops are at the bottom of the half-hour candles and at the top, right? Yeah, if you come into the trading syndicate, and I think Steve's still running that sale, right? We'll teach you this stuff. Yeah, it's like, you know when you look under a microscope and you flip those little lenses? This is like flipping the lens onto serious magnification, right? Now, the problem with market profile charts is sometimes you can go a little too much down the rabbit hole, right? But there are four basic things that these charts tell you, right, that are very, very helpful to trading, okay? One of them is they tell you where your inventory is priced, okay? So the nice thing about it is you can go, okay, the blue stuff is where 70% of your inventory is priced. Market profile traders call that a value area. A little confusing, right? But this is where 70% of your product is priced at. So now you can see that we are selling this product up here for profit, right? And then when we put it on sale, we'll come back down to where we bought it, right? VWAP is an indicator. VWAP is an institutional benchmark. So VWAP is like if you gave me an order to buy you 1,000,000 shares, I'd try and buy you under VWAP. To sell 1,000,000 shares, I'd try and sell them above VWAP. So you call me tomorrow for another trade because I know what I'm doing. I get you good prices, right? A trader is supposed to get good prices for his client. So what market profile does, it tells you where the inventory is priced. So you're not buying it here and you're not shorting it here. Okay, that's number one. Number two is it tells you where shorts are trapped. It'll also tell you where longs are trapped, right? And then it'll also tell you where shorts are trapped if you have something called a poor low or a poor high, which I don't see in these profiles. But there's about four things, takeaways from market profile that you can use. And it's a beautiful way of keeping track of inventory. Because all any chart is a sales chart. And it tells you tonight sales are going pretty good. We got cheap stuff here, we're selling it here. Right? Because it's a market. Right? We had stuff here, we put it on sale, we looked below 68, 64, rotation right back up. Right? Markets are very simple. Right? The purpose of a market is to distribute inventory, nothing else. Once you understand that, you will trade like a professional, right? VWAP is an institutional benchmark, right? So institutional traders in the old days would get clients a fill below VWAP, above VWAP, above if you're selling, below if you're buying, so you get good prices, right? Yeah, markets are there to distribute inventory, nothing else, right? So large traders buy 5,000, 10,000, 20,000 ES contracts, and they try and sell them for a profit. If they can't, they put them on sale and get the heck rid of them, right? Just like any other business person, right? You acquire inventory, and then you dispose of it, hopefully at a profit, right? It's a simple business, which has been overcomplicated to keep you poor, right? Most trading rooms, they talk about all sorts of fancy stuff, but nobody makes any money. They're always blowing up accounts because they're trading too often. They don't know when to trade. They don't know when to sit and watch, right? You don't trade this. This is just garbage, right? You have to be a bit of a snob with your money, right? And if you come into the trading syndicate, we'll teach you how to do that, right? Spend a month with me, go through the videos, ask questions, right? And I promise you'll learn more with me in a month than you will 10 years anywhere else. All you got to do is listen. Pretty simple. And I think that's it. I'm going to shut it down a little early. Does anybody else have questions? Yeah, I have a, I took what, a little scalp and I made four ticks. Did you have one above? I'm sorry. How do you draw the cost basis zone? Can it be extended? Oh, okay. Let's do that, Ed. Cool. Stay with me, brother. Sorry, I was a little asleep on the switch. Let me find a clean chart. Okay. Here's a 5-minute chart. Okay? So Ed, all we're doing when we're looking for balance is you're looking for two-sided trade. So all you do you see here, there's a little balance zone. Okay? And the best way to do this is to practice it. So how this works, so we look for a high and a low, right? And we want that, when we look above that high, we go right to that low. You see? This one is not bad, right? Let's see if we can make it a little more clear, right? See, there's a low and a high. When you look below that low, you go to that high. When you look above that high, you go to that low. Did you see that, Ed? What does that mean? Now, there's a business reason for this, right? This isn't random. The business reason is the market makers, what they do in this zone is what's this level? Sorry, give me a second. So this is 69.90 right here, okay? Okay? So the market makers are buyers underneath 69.90. As soon as it gets over 69.90, they're on the offer. Right? This is a distribution balance. Could be accumulation or distribution, but what they're doing is they're taking this crap and they're selling it up here. But they have to support the market because otherwise it'll collapse. So they're a buyer under 90. As soon as they flip over 90, they're on the offer. So if you look at that, this is the bid, this is the ask. So what we like to do, the trades we take, our favorite trade is when we look below and fail. So when we come up, let me just mark these levels, okay? So when we look below 69.88 and a quarter and come back up, we buy 69.90. We put our stop at 88 and a quarter or under the bottom of that candle, right? And then we sell a little here in the middle. We sell a little here and here. And what we do is we trade the rotation. And if you want to short, when the market looks above and fails, you short here, you put your stop here, and you cover here, right? So it's this back and forth that we trade. So we short this, we buy this, and this is where we have a place to put our risk. So our risk is very, very tight, and it's structural. So the business reason for the trade, right? There's no supply under 88. I'm a buyer here to sell supply up higher. Here there's selling competition. I will sell with the sellers. When they stop selling, I cover. Very simple. The ask and the offer are the same thing. And that is what we call balance, which I call cost basis. right? So you have a distribution cost basis where you're selling, an accumulation cost basis like here. See? So when you have this, if you want to get targets, you just simply double it. Cost basis is a balance zone. That's all it is. See, market profile people, as much as I love them to death, but they overcomplicate the crap out of things. They talk about value areas and excess and all of this stuff and points of control and right? But it's so simple. The value area is where you buy your crap and hopefully you sell your crap higher, right? Exactly, Dave. So say if you're up here, we sell two for every one we buy. Here we buy two for every one we sell. And that's how you make a market. And that's pretty much it for me, right? Very simple. It helps us trade, it helps us manage our trades, it helps us manage our emotions because we know where to take to do business, right? You know, it's a very simple business. Execution is difficult, right? So we try and make execution a simple process. And that's it for me. Have a wonderful morning, folks. I will see you at 9 a.m. Thanks for being with me. And come join us at the Trading Syndicate. We'd love to see you. Okay? Bye for now.